here's a chart of the S&P that, if you follow me on Twitter, you know has been one of the most controversial charts I've ever put out. Let me explain why I drew this line. First of all, I drew this line because you could be rest assured that back in 2020, everybody was drawing those twin lows. So all I did was extend it out, and that spring low bounced right off of it. Drawing a line on a chart is basic geometry. 2 points make a line, a third confirms it. The more points on the line, the better the line. Okay, breaking the line, let's talk about that. First of all, why do I draw such a thick line? Because the general rule of thumb is that to break a line and really mean it, especially a long-term line like that, you should break it by 3% at least. Because, sometimes a break is not really a big break. Sometimes it's a false break. Same thing on the upside, by the way. Look, you broke out of these two highs here, but it wasn't very good, was it? So I am using this line. It's not definitive, but it certainly is worth paying attention to. I also use it because if I go back here, here's the pre-COVID high. And then you get the big correction and you come back up. Notice how in the fall of 2020, we made our higher high and immediately gave it right back. And we rallied and came back again. It wasn't until here in late 2020 that we left this whole area behind. Okay, so I think that this general line represents that whole post-COVID rally period. If you break this area, you've basically given it all back. You've done an entire round trip on that whole post-COVID, too much money out there, the Fed too easy, all the rest of that. Until then, it's a bear market, but all it is a corrective action back to where we were. So if you start to break this general area, you're in sort of a whole new regime. When it comes to the Dow, this is shorter term, it's only just this year. I have been watching this channel on the Dow all year. It's been pretty good. The Dow is currently just above, a little bit above 33,000, so we're still in here. What would it take for me to believe that we finally have surpassed this channel? That's honestly, I would have to see a sustained move over this area. And knowing that we're about to get overbought in a couple of weeks, we really have to clear that area significantly for me to think that we've left this channel behind. Because as you can see, we fall out of the channel. We come out of the channel, but we haven't been able to maintain it. So we would really need to be able to maintain that channel. So right now, the Dow has been the leader. It is my contention that if bonds rally, and we'll get to bonds in a minute, bonds, that NASDAQ should lift. Okay, bonds are rallying, thank God. And so that's why my focus will probably now shift away from the safety of the Dow names, if you will, to the more speculative NASDAQ names. So here's NASDAQ. Again, these are the same lows that you had in that post-COVID time. Only remember, NASDAQ was hopping back then. And there's your two lows. But take this straight across. It's a flat line. We are trading under it, okay? Currently, NASDAQ is trading right up about here. So again, you got to use that 3% rule. You have to use a thick line. You have to use your eyes. I often say, if I can't see it from across the room, it didn't happen, okay? And that's for the big picture. Obviously, when you're day trading, it's something different. So I think it's NASDAQ that needs the lift now. Play a little catch up, because as you can see, NASDAQ was terrible in this October rally. And again, I will get concerned when we get overbought and if we have negative divergences. I also think the dollar plays a big part. This is obviously doesn't have this morning's dollar news, but you know, we're trading, let me just check where the dollar is now. We're trading, you know, down here. That's a clear break of a trend. I mean, if 2 points make a line and the third confirms it, that's one heck of a great uptrend line that you've had since February in the dollar, and it's broken. Now, the dollar has good support down here at 108. You can see that. So I would imagine that the dollar will get a bounce, but I will now imagine bounces will fail. Okay, that again should help the NASDAQ names because they're the multinational big cap names that, you know, if you date back even to June, it was Microsoft telling us they were going to have dollar problems. So it should help them. And then there are bonds. I've been calling all week for a rally in bonds. Thank God they finally answered my prayers. And it's the yield on the 10-year, which is currently down around here. And again, if I drew in a line, you'd see there's going to be a little bit of support in this 390, 395 area. But again, that's an uptrend line that's been in place since August. And it comes with a lower high. So this should also help stocks. That and to me that's pretty much where we are in the market right now. I'm in the mind that we can be choppy, but we should have another rally until we get overbought intermediate term in a couple of weeks. And then if all these negative divergences are in place and breadth starts to get cruddy and all those other issues that we had in August, I'm going to turn bearish.